Throughout my stock option video series, I've always mentioned that I loved options. But like everything in life, we need to be able to quantify it. Either you love it only 3,000 or over 9,000. We still need to be able to measure that. Welcome back, mindful investors. In this video, we're going to do something a little bit different. It's the third Friday of the month. So you know what that means? It means it's a huge options payday. We're going to go through my portfolio and see exactly how much I collected today just from selling option contracts. Personally, I've never done that before. To me, that's kind of like going to the bank, taking the money out and count it one by one. I normally just do it during tax season, but just for this video, I'm going to be Iron Man and Vegeta. I want to be able to measure how much I love it. Let's get started. So as I browse through the portfolio, I noticed there are three different plays. There's the naked puts, which is also called the cash secured puts. There are a bunch of covered calls, and then also there are some naked calls. So these are my three main strategies for selling options. For the first two methods, the naked puts and the covered calls, is really self-explanatory. I'm just taking advantage of sudden spikes in the stock price of a really premium company. But for the naked call, that's a different story. That's you need to have imagination, you need to create your own story. So I'm going to talk about those a little bit more. But for the first two methods, I'm just going to breeze through it, count the number of contracts and the amount I secured. And how am I going to keep track of this? I can easily plug it into a spreadsheet, or the better option with these poker chips. And I've chosen red and greens just because it's festive and it makes me happy. And who is not happy when they're counting money, right? To keep things simple, we're gonna let these chips be $100 each, whether if it's red or green. And we're gonna round off the positions to every $100. So let's say if the position is at 150, we're gonna round it up to 200. And if it's 149, we're gonna round it down to 100. And then I'm gonna use these post-its to keep track of the number of contracts, because that's also interesting to me. As we start off, we get a whole bunch of these Hong Kong stocks. They don't expire today, December 18th, so I'm not going to count them. So here's some for Apple. We have 1, 2, 3, 4. There are 4 Apple contracts here. 3 of them are short puts, 1 is short call. That's probably going to be the ratio looking ahead, as in a 3 to 1 put to call ratio, because normally I love the short put a lot more than the short calls. And the first one we collected 307, so 3 chips. Second one, 107, so 1 chip. Third one, 105, 1 chip. Fourth one, 100, 1 chip. December 18th, Cheesecake Factory $45 call. This is an interesting one because it's a naked call. So ultimately, I'm taking on unlimited risk while the reward is only $5.50. Let me explain a little bit. We see the average price here is 55 cents when I sold these call options. And then we'll look in the charts. When was it 55 cents? It's around this area right here. November 9th-ish, when we seen like a huge candlestick up like this. Like that's when I shorted. What happened that day was that Pfizer announced that they have a vaccine for the COVID. And pretty much immediately, the stock jumped from $31 all the way up to like $38. Like a 20% jump just from that news. But then with any piece of news, you need to be able to analyze what's behind it. For me, it wasn't just this 20% jump that triggered my short call strategy. I look back for this year's stock price and we see that the stock peaked at $42 in February 17th. That was when everything was firing. There's no closure, there's no COVID, there's no lockdowns, nothing. So that was at the $42 levels. When this stock automatically jumped from 31 to 38, just from some vaccine news, it seemed kind of off to me that they're kind of projecting that within the next year, everything would be fine and they'll get back to the pre-COVID levels, which is very unlikely in my opinion. And for the second factor, let me ask you, what's the most profitable part of a restaurant business? Is it the appies, the cheesecakes, the pastas, or what is it? Well, if you talk to any restaurant owners, it's always the liquor. Because for liquor, you just pour it out of the bottle. You may decorate the glass with a little umbrella, an olive, a tomato, or whatever, but the margins for the liquor is absolutely huge. They would be the main driver for any restaurant business. And throughout this COVID times, we don't have cheesecake factories here in Canada, but in any restaurant business, the number of people going there are cut in half. And the time they're spending there is probably cut by at least 30%. And as we all know for the liquor business, the more we drink, the more we drink. So if they're spending less time there with less people, it's more than likely that they'll drink much less, therefore making the business much less profitable. Anyways, let's get back to the tally. So Cheesecake Factories, I sold 10 contracts, collected $550. We're gonna round up this time to $600. $600?
And then Chewy, I sold 4 contracts for $200. For Clorox, in total, I sold 3 contracts for $400. Chipotle, I sold 1 contract for $100. Costco, 1 contract for $124. Disney, 1 contract for $100. DocuSign, 2 contracts for $218. We use some of the green ones. Domino's Pizzas, 1 contract for $149. We round down to $100. Lastly, we have 2 contracts for $100 total.
FUTU, that's a brokerage that some of you may know is ran by Chinese, and the technology combined with the creativity is out of this world. So FUTU, 8 contracts at $965. We round it up to 1,000. So here's 10 chips.
Fiverr, we have a short put and a short call. So 2 contracts for a total of $420. So 4 chips. J&J, we have 1 contract for $100. Kimberly Clark, we have 1 contract for $115. Lululemon, we have 2 contracts for a total of $846, so 8 chips. Netflix, we have 1 for $100. So for Palantir, we have 20 short puts for a total of $780, so 8 chips. Peloton, we have 3 contracts for $100. PayPal, 1 contract for $100. Square, we have 5 12 contracts, all short puts, and they've collected a total of $5, 6, 700.
Tesla, we have 2 short put contracts at $160 and $200. Right now, the stock is at $650. So I definitely weren't aggressive with my short puts. If I was more aggressive, I could easily tripled all these premiums. But I just wanted to win without taking much risk. Tesla, $1,000 here and $500 here, so $1,500. Unity, we have 5 contracts, $628. Unity is kind of a new IPO that went up maybe 6 months ago. What they do is that they deal with a lot of the gaming and the VR, AR sector. It's like their own programming language for gaming and AR, VR. I asked my gamer friends what's so special about this Unity. They just said it's very user friendly and anyone can pick it up within a couple months of training. So sometimes we have to do some market research and see how legit this stuff is. Okay, lastly, we have XPEV 3 contract for $800. Zoom 4 contracts for $1,000. XPEV is similar to my Neo play, what I kind of call the bubble, when everything shot up to 300% in like 2-week time frame. So that's what I call the bubble. Eventually, it dropped down from the 75. Right now, I think it's at like $47. So that's how much it came down from the peak. As we can see here, the premiums actually went up to like a high of $13. And then right now, it's only at 1 penny. And therefore, I collected all the premiums of $800. So that's it. That's all the options contracts that expires today for me, December 18th. I'm going to tally up all the contracts and all this amount right now. 82 contracts that expired today. And just as a rough guesstimate, since I like to sell contracts that gets me at least $100, then I'm guessing the total amount is 8,200 plus, because some of them are much more than 100. Let's say my Tesla position there was $1,000. So blended average above 100, so 8,200. Okay, I had no idea the amount would be so huge for today. Anyways, let's count. Okay, here's a little tip when counting chips. We don't count them one by one like this. No, don't ever do that. So after we counted 5, we need to stack them up like this. And possibly double it and make it 10. And then double that to make it 20. And once we have each of these representing 20 chips, then we can just kind of line them up. And then however many stacks you have there, you multiply by 20 and there is your number. And then you count the scraps. So here is a 20 stack. Okay, so all this itself is already 10. And then here's another 5, 10, 3, so another 13. So in total, that's 11,300 that I collected today from selling the premiums. As I mentioned before, I had no idea of this amount because I never tally things every single month. I tally it at the end of the year, but it's a little bit surprising because some months the volatility swings so hard that I have to sell more contracts. And there was a total of 82 contracts that expired today. I don't think that's the norm. I think that's above the norm, maybe by 30%. But blended average, maybe I sell 50 contracts a month. I'll do another one next month and kind of see what the average is. I think it would be much lower. Anyways, after knowing this amount, I can really justify why I love selling stock options. And let me know what you think. Are you going to try and sell some stock options in the next couple months, couple years? If you do, good luck with it. And if you have any questions, let me know. Drop me a like and subscribe if you found any value in the video. Thanks again for watching, take care, and I'll see you in the next one.